And we had a very strong session yesterday with the JSE up about 2%, but really drifting a little bit weaker today. Do you think investors are just taking profits ahead of the weekend?
I think investors are definitely taking some profits. I think some of the company results out this morning might have disappointed the market, and so they've taken results and now taken some profits, and now they're looking forward to the GDP numbers this afternoon for direction.
Well, we're going to touch on those results in just a minute, but perhaps let's touch on those GDP figures. That's the second quarter GDP figures out of the United States. What's the market looking for there?
The market's looking for a decline in the number. We can expect, contraction, but a slower pace of decline. And when we look at all the data that's come out in the last, month or so, we're likely to see better numbers coming out. We're looking at different programs that the government is trying to institute, the cash for clunkers. The housing slump seems to have eased. The manufacturing decline has eased, so really positive numbers of, going forward. And the market's really looking for a confirmation of a bottoming out of the recession, and hopefully, we'll get that confirmation through the GDP numbers this afternoon.
And of course, we have seen about half of the S&P 500 companies already reporting back their results. As you mentioned, a lot of them have been better than expected. So if we have a disappointing GDP figure today, do you think the market could take a bit of a tumble?
I think it will, purely on the fact that, investors are looking at the jobless numbers, and until the jobless numbers, feed through in terms of the GDPs, in terms of consumers starting to spend, the economy is not going to really turn, and the world is really waiting to see that turn, because the US contributes 20% of the global GDP, and if we don't see a recovery there, then that means that the recession is going to go longer than expected.
In which case these companies, these equity prices might have got a little bit ahead of themselves then.
Yes, and then we'll be due for a correction. We have been looking at the all share. It dipped over the 24,000 level yesterday. It wasn't really a convincing break. So until we really see a convincing break over that, we could see a 2,000 point spike up to 26,000. But we really need positive GDP numbers out from the States to really get us started.
Of course, you mentioned results out today, and of course the big one that everybody's been waiting for is those results from Anglo American. It's reported underlying earnings down 68.5% to $1.1 billion, but that was slightly better than the market had expected, wasn't it?
Yes, we had expected down 71%. It did come through at 69%, and you could see the market kind of reacted. But when you look at the actual figures, you'll see that increase or decrease to 69 was really due to a decrease in costs, but I think what was really disappointing was we saw the coal results coming off a lot. They came down at 65% lower, and that was really 13% lower than our forecast, as you'll see through the EBIT numbers. So really quite disappointing for the markets. They did, however, say that they're not going to be paying a dividend, which is in line really with their no dividend policy, that they stated earlier. And I think that's really positive for them in terms of capital preservation. So, I think overall the market didn't really seem to be too happy with those results.
Well, might be positive for their capital preservation, but not very positive for investors who might have been looking for a dividend. Of course, we saw the share price coming down over 1% this morning, but it was up 4.5% yesterday, so really just taking a bit of profit there.
Yes, literally in terms of profits, slight disappointment in terms of the results. So just a combination of both.
Now, what did you make of the Anglogold Ashanti results? They look quite good on the surface of it. Record quarterly results, and also more unwinding of that hedge position.
Yes, their results were a mixed bag. The market seemed to not like that either. Their production numbers were quite disappointing. Their costs were higher, and that feeding through from a stronger rand. They did, however, their really impressive reduction in the hedge book to 4.47 million ounces, and they did increase their balance sheets. strength. So really, eyes, to look out. It's Anglogold is, exposed in terms of the rand, and if we continue to really see rand strength in the next 6 months, Anglogold could really be hurt by that.
Of course, we also had that trading update out late yesterday from Standard Bank saying that profits are going to be 20 to 25% lower for the first 6 months of the year. And of course, that really followed that trading update earlier in the day from Liberty Holdings, which pointed to a 1.1 to 1.3 billion rand loss. So really not unexpected for Standard Bank then to come under pressure.
Yes, and I think the banks are, or rather have come under pressure with all these statements coming out. And one must look at where they are right now. And if one had to take a speculative view, I think they're really in the eye of the storm at the moment. We're hoping that this is, really the worst that we're going to see at the banks. And I say that because, if we see CPI coming through lower in the next couple of months, we might see a cut in interest rates, and that will really increase or reduce the debt cost ratio, even though that will put a squeeze on their margins. The debt cost ratio reduction in terms of the retail impairments will really be a benefit for them, because that flows directly into their income statements, and we should see some earnings. However, just in saying that, that in terms of the lag will probably be in a 12 to 18 month view on that.